Hi, I'm Peter Rose, founder of Longwood Currency Trading. How to manage Forex exit uncertainty. How many times have we been in situations in a trade that's gone in our favor? And I don't need to talk about stop exits or whatever, but getting out of a profitable trade. And you go, oh, geez, do I get out now? Has the price got any more juice to it to get some more distance to it, or is it starting to break down and I should take my profit now while I can, or should I give it 5 pips or 10 pips? Or I mean, really, we've all experienced that. Let's put a definition on that. That's making trading decisions in real time. And exiting is not a decision that you make in real time. There have to be rules for that. In my life cycle of a currency position that I teach in my course work, and I've done over 500 videos and talk about it all the time, the life cycle of a currency position comes from my 33-year career as a senior software engineer, designing and developing very complex business applications, computer applications, and using the software development life cycle to do that. The software development life cycle is a process applied to very complex problems that simplifies the problem and shows you how to solve problems. And it's applicable to any discipline. I simply applied it to the currency markets 10 years ago or something, and identified that as the life cycle of a currency position, having 3 separate problems: entry analysis, position management, and exit methodology. And those 3 problems each have one rule that solves them, and each rule has 2 to 4 conditions that need to be met for the rule to execute. Well, because exit methodology is one of those, then therefore I have a rule that solves that problem. When we're looking at trading as a whole, the less decisions that you need to make in real time, the better you are. And your conditions in your rule define the specific area of concern that you're looking at. For example, in entry analysis, those 4 conditions that I have, each one is sequential. If this is true, then move to the next condition. If that's true, move to the next condition. If the next one isn't true, I don't enter the trade. So it takes the runtime decision, real-time decision, away from me and makes that analysis of do I bid ask or not very simple. Exit methodology and entry analysis is the toughest of them all, obviously. But exit methodology can be a bitch too, because you've got a good runner and you're saying, man, I don't want to get out of this thing because XYZ. It's going to run further. We just had an economic indicator release, and it supports the position that I'm in right now, or whatever. But you want to let that run, but at the same time, it's starting to slow down. There was some implied volatility that got you into that trade. It's accelerated you beyond your profit target, and now you're in this runtime environment of trying to make up your mind whether you want to get out now, whether you want to let it run. If you're going to let it run, where are you going to float your stop? If you're going to let it run beyond wherever it is that you're thinking about, do you still have some dry powder that you could add some more lots into the situation? If you're going to add lots, how many do you add? When do you add them? Where does that? How does that affect the average position value as a function of the current price action? What's the ATR of the time frame that you're trading on, and gauging what the current candle size is in relationship to that ATR, or maybe some other ATR. All this shit going around in your head are branches of decision that you could go under. And as I've said many times, having unrelated data, unrelated objects, Like I have object A and I have object B. How many different ways could I arrange A and B in? Well, if they're unrelated, non-sequential, I can arrange them in 4 different ways. I can have object A by itself, object B by itself, AB, or BA. So from 2 objects, I can have 4 different permutations. If I have 5 objects, A, B, C, D, E, C, D, E, I have 325 different permutations, and it's unmanageable. Even 3 decisions gives you 15 or 19, something like that. So here you are in this position, extended beyond the profit target, and you have, I just rattled off, I think, 4 of those. It's easy to throw another one in there. There's 200 different pathways that you can go in ordering when you're going to get out, and you can add complexity to that by saying, well, it never hurts to take during the cash register, so I'll take half my position off now, and then what? You're losing the added pips that you're gaining, taking additional risk with half the position. Well, that really doesn't make much sense. If you're that worried about the position, then you ought to go all out, or should you? Well, you've got 200 different decision paths that you can take. So how do you resolve that? What are you going to do in real time? Well, the fact that in the life cycle of a currency position that I teach, entry analysis, position management, exit methodology, the fact that exit methodology is in there means that it needs a rule and conditions to that rule to help me decide when I want to get out. Now, I can't give you those rules or those conditions because they wouldn't make any sense to you unless you're taking a course from me where we build over a period of 6 weeks the case for the rules that we're creating. And I'm not creating the rule for you. I'm showing you how to create the rule that's going to be the best for you. I teach day trading, but that doesn't necessarily mean that you want to be a day trader. You learn this stuff as a day trading exercise because what you learn as a day trader can be transposed up into swing or long-term position trading, or if you want to go to scalping, then the stuff that you learn in day trading is applicable down there. But you can't learn position management and then determine, oh, I think I'll just do a day trade today. I just think I'll take 2 or 3 trades and I'll be flat at the end of the day. You're going to lose because those rules for long-term position management are not valid down on the day trading chart. That's why all the people that are doing long-term position traders are telling you it's so much safer up on the daily chart. Well, you have to be able to determine for yourself why they're saying that. They're saying that because they know they're comfortable with that, and they're comfortable with taking a 100 pip risk. Are you comfortable taking a 100 pip risk with your intermediate level experience? No, I don't think so. Why would you ever want to take a 100 pip risk? If you're wrong, why wouldn't you want to be out in 8 to 10 pips? Why would you want to float a 20 pip risk? If you're wrong, you're wrong. So if you're wrong, you want to be out at 10, not 20. And the problem is that most of the folks that I talk about that are doing this 20 pip risk stuff don't respect that, and they pull the risk, or they only pull half off and let the rest of it run negative. These are conditions of price action that must be dealt with in the conditions of the rule in the phase of the life cycle of currency position that you're in, trading at real time at that particular time. And so your exit methodology, therefore, must have conditions that tell you when to exit the trade. And if you have that, then you don't have uncertainty. The thing that causes us uncertainty in anything is too much information, too many different decision paths available to us. That causes stress and anxiety and uncertainty. Why have that in a successful position that's gone beyond your profit target? Why are you wringing your nuts over a decision as to whether to exit now, exit then, blah, 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 blah? Why don't you have a condition in that exit rule, in that exit methodology rule that satisfies, or conditions that satisfy, all of the conditions that you may face at that exit decision time. And again, the fact that you're not going to exit doesn't mean it's not an exit decision time. You should be making those exit decisions when you create your whole trading rules, the framework for all of your trading rules. You don't want to do anything in real time that you don't have to. There's plenty of stuff that we do as traders in real time, but that real time decision making is based on the rule. If the rule is good and it has good conditions, then you can base it on, oh, here's this condition, I need to get out at this point. You can do that, but you can also use the rule itself as a framework for making real-time decisions. Oh, I'm doing this, my conditions say that if this happens, that I should get out. But that's starting to happen, but it hasn't started yet. And so I'm going to continue to hold until the condition is met, because that condition has to be met in order to generate an exit. I mean, it all comes down to understanding how to create conditions within sequential conditions within a rule, and how that rule has to communicate with the rule before it and the rule that comes after it. If you don't know how to do that, I don't know how you're going to be successful. Well, I know how you could be successful. You put 10 grand in, you trade one full lot, you lose 10 grand, you put another 10 grand in, or 5 grand, or whatever it is, and you trade and you lose that, and you do that about 8 or 10 times. So you're 60,000 bucks out, and you finally, it dawns on you, oh, I shouldn't do this, I shouldn't do this, and I shouldn't do that, and I shouldn't do this. Oh, I can have a rule that triggers that. And you're all set. So you don't need to take a course from me. You just have to lose 40 or 50 or $60,000, which is what I did. I studied the currency markets from 2007 until 2018, I think it was 18, without trading a large account. I had a couple of, in 2012, I had two minis I was trading, a couple of $1,000, and I lost that. This is after studying the market as an academic exercise and writing computer simulation code against it, which implies looking at price action and understanding it and developing moving averages and testing all these indicators that are out there, engulfing candle patterns, you know. So from 2007 to 2012, I didn't trade. I just studied and I ran stuff in a demo account as far as how different things should go together. Oh, I was a hero in demo. I was doing 15% against risk for 6 months, 9 months in a row. Well, it was wonderful. But when I put my $2,000 up in 2012, away that went. I thought, wow, I ran into an anomaly. I'll try it again. So a couple of months later, I put another couple of $1,000 in, trading 2 minis, and I lost that. I thought, oh, I must need more education. So from 2012 until 2017 or 18, I took courses. I read more books with a different slant toward trading as opposed to analysis. I did all that stuff, and in 2017 or 18, I went in with $45,000. I figured I knew what I was doing. And about 4 months later, it was gone. $40,000 of that was gone. I thought, well, I'm not stupid. I got a degree in physics, almost a minor in math. As I mentioned, 33 years as a software engineer, 40 years in real estate investment. Been involved in the martial arts for, at that point, for, I don't know, 48 years or something like that. I've been in, this is 2025, so I've been in 56 years now in martial arts. So dealing with real-time problems of street self-defense and teaching self-defense and karate to people, I know about education. I know about all that stuff, and yet I lost $40,000. Why? Why did that happen? And that's what's happening to everybody that I've talked to. They try it, and they try it, and they lose. They try a different thing, and they lose that. And then they try one thing, and they're consistent, so they consistently lose. They don't get it. They don't understand it. The odds are 90% against you. Why? It's because of the education that's being consumed, and it's because of the morass of information that's out there. I realized that after I lost $40,000. $40,000 was a wake-up call for me. I mean, I retired as over $1 million net worth from my real estate investing, but you lose $40,000, that stings. Particularly when you're standing there looking at yourself saying, well, you're not stupid, but you just must have done something really stupid. What was that? So I backed away from that, as I've said many times in my videos, and I looked at what the currency market was, and I looked at my interaction with that currency market. I was trying to solve the wrong problem. As soon as I figured that out, that's where the life cycle of a currency position came from. I just relied on my background as a software engineer solving really complex problems using the software development life cycle. And I created the life cycle of a currency position with 3 problems. And I knew enough that the conditions within each one of those rules had to be sequential. I had $5,000 remaining. I just about doubled that. I came within $200 of doubling that in about 4.5 months. And I thought, well, that's pretty good. I put $10,000 more into the account, and then I put $50,000 more into the account and just continued to go forward from there. Have I made mistakes since then and lost money? Yes, I have. In 2023, I made a really big mistake in the 4th quarter. I was 80% up against my risk, and I just went to sleep. I just did stupid shit and lost 6 figures in 2023. And then trying to catch myself, there was a blowover from that trade into 2024, and I lost a lot of money in 2024. So I had a down year in 2024 as well, because I couldn't make up for the losses that were from 2023 and the early part of 2024. Didn't have time to make them up. So the fact that you have rules doesn't mean that you won't fall off the ledge once in a while and make some errors. I mean, since then, I've been really consistent and been able to build up my bank. And then you take these losses and you go along and you're doing okay. And so we'll see how it goes. The problem comes when you have rules and you don't follow them. And you could say, well, Peter, just follow your own rules. They're your fucking rules. Well, yeah, they are. But my problem that you don't have, that I have to struggle with, is 40 years of real estate investment risk management training, which I have in my DNA. And it is not compatible with trading currencies. And that becomes an emotional thing to deal with as opposed to a technical thing. You can have all the technical things out, but if you pull your stop and you go, oh, it'll come back, when it hits the 55 period moving average on a regression to the mean thing, it'll come back. And it doesn't come back, and all of a sudden you're 200 or 300 pips out. Whew, that's going to be really tough. But that's my problem. So I need to solve that. Emotional problems are very difficult to deal with. They're easier to manage once you have a good set of rules if you don't have that background. So I haven't had a student yet or anybody that I've talked to that has had something like I have, 40 years in real estate or 40 years of doing something, 20 years of doing something. Most guys are 30 years old, so they don't have the experience and the time to build up bad habits. So when I'm working with them, whether it's in a course or just to send me an email and they would like a little help, which I'm happy to provide at no charge, if they're trading and they've got enough other life background behind them, and they ask a question and I answer it and they go, oh, really? I'll try that. Whereas most of the time, when I get an email from someone with a question, I answer the question and then they ask another question. It's basically the same question because they didn't understand the answer because they don't have enough background. And their brain is cluttered with this educational stuff that's out there and the massive information. If you're in that situation where you're not having the success that you want to have, and you have at least 6 months of trading under your belt, and you've done 50 to 100 trades, and you're not successful, you're not consistent, what makes you think that by continuing what you're doing is going to change that? There must be something that you don't know. So go find somebody that you can trust, pay them whatever amount of money that they need, because in the long run, when you start trading 5-lot positions, you're gonna change your life, because it'll either replace your job income or significantly chew away at that replacement of the job income when you're trading even three lots at 30 bucks a pip. When you look at trading and you compare that to your job, did you just walk onto your job as an architect and start architecting? Didn't you have to go to school and go to advanced courses and maybe even have a graduate degree in medical technology, or didn't you have to spend 4 or 5 years as a plumber's apprentice? But you think you're going to read a couple of books and take some fool's course on engulfing candle patterns or fucking Bollinger Bands, and you're all set and you're going to step into the fray with your $20,000 or your $2,000 or whatever it is you got, and you scratch your head when you lose it. And then you go in and you lose more money. Please, if you have that background, 6 months of training, 50 to 100 trades, you've been trading in a real live account during that period of time with at least $1,000, so that when you lose 20 pips, it's a pizza and it hurts, and you're not having the success that you think that you should have, send me an email. And I'll talk with you, find out a little bit more about you, and maybe you can send that stuff in the email. Hi, I'm so-and-so, I'm this age, I live here, I've done blah, 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 this is what my education is, and this is the problem that I'm having. Maybe I can help you with email, or maybe we get together on a video conference and we talk. I'm not trying to sell you a course. I don't need people to take my course. I'm retired. I work personally with people that take my course. That's why it's expensive, because you get me. You get the mentor, the guy that's lost 6 figures, and it has a set of rules and conditions that you can put up against anybody's trading process and say, no, this is the right way that you do this. This is the plan. You got to have a plan. And if you don't have the correct plan with sequential rules, solving the right problem, then how can your expectation be anything but failure? And so how to manage your exit uncertainty is going to be impossible for you in real time. Or even if you have somebody's canned rule, like the golden cross. It's so simple. When the short MA crosses the long MA, make your trade. Really? Try that. Well, it works maybe on a daily time frame or on a 5-hour time frame. It doesn't work down on the 1 minute or the 5 minute. And there's a reason for that. But if you say, oh, I trade Golden Cross on a daily chart and it works. Yeah, it works. But look at the differential between where the cross happens and where your trade is executed. What price is your trade executed? It's not executing at the cross point. And so you may be winning, but you're only winning about, a third to maybe half of what you should have got if the timing would have been better. Golden Cross doesn't work. It works, but you're leaving a tremendous amount of money on the table. So it doesn't work. Like they said in the movie Top Gun, there's no trophy for second place. It doesn't count. You either win or you don't. Lee Chevelle, Richard Dennis is one of Richard Dennis's turtle traders, said at the end of the day, you either win or lose. What's the question? So if you're not winning, there's something that you don't know. Maybe that's something that I can fill in the blanks for you in an email or in a short video conference. If I can't, and you want to talk about courses or consulting with me, that's fine. I'll talk with you about it, but I don't take everybody to train because I'm retired. Like I said, my time is more valuable to me than any amount of money that you could throw at me. Because I just don't give you an hour of consulting time with the course. And the course is it's a 6-week program. We get right to it. And you need to have some background in order to understand the answer to your question. If you're just a rote beginner, well, I'll work with you as a rote beginner, but it's a whole different process. And I have a very difficult time with rote beginners because you question everything in the wrong way. You don't understand a problem solution. The first thing in my fast track course, which is the course that I use as my primary vehicle for training, is what's a problem and how do you solve it? If you don't understand that, how are you You're going to look at the currency markets. Man. How to manage Forex exit uncertainty is you've got to understand the market that you're trading and the order flow, how that affects price action, and what are the conditions that you need to look for during that period of time when your price has gone beyond the profit target and you're looking at how far will it go, what will it do, what should I do in relationship to what it does, and when do I do that? If that's the situation that you're finding yourself in, then the answer to that is that you need a rule that contains conditions that basically foreshadows almost everything that you could come in contact with in a situation where your price is going beyond the profit target and you're trying to manage that and maximize the amount of profit that you get out. Unfortunately, most folks that have a profit target don't take the profit at the profit target point. They let that price continue to go, and they're thinking about that, and all of a sudden they're running into a pin bar situation. And we've all seen 60 pip pin bars on the 5-minute chart during an NFP, and I've even seen it during minor economic indicator releases, data releases. And so there you are. You've gone 5 pips beyond your 15 pip profit target, and you get a 60 pip pullback, but you're not disciplined enough to respect your stops, or you haven't put your stop on, and now you're 30 or 40 pips below your entry, and you're way out because you've staged more lots in a happy-go-lucky fashion. So you don't have rules. If you don't have rules, where's the guardrails? You drive down the road and there's guardrails there. That isn't there for the person who's going to turn and try to go off the road. It's for the person that the sun shines in their eyes and they go like this and they hit the guardrail. That's a stop order. And the lines in the road aren't to prevent you from doing something. They're to guide you along the proper path so that you don't intermingle with the other cars. That's all rules are. I've had people argue with me. Well, I should be able to do blah, 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 blah. Oh, man. In self-defense and teaching karate, you cannot believe the number of people that have said to me, well, I have a right to walk through that park at any time I want as a citizen. I shouldn't have to worry about, yeah, you shouldn't have to worry about it, but you should worry about it because there's bad people in that park. And if you wander through that park and you get slapped or a knife pulled on you, that be your fault, not the park's fault, not the city's fault. It's your fault because you didn't have rules that made sense, because you think rules constrict you. And I think a lot of the folks that I talk with feel that these rules are constricting their ability to trade. Well, first of all, you don't know how to trade, so how can you have any artistic or intuitive ability? You don't. You need rules to guide you so that the success of those rules gives you that intuition in what to do in real time when the rule doesn't apply in that particular instance, because you're going to run into that. But the rule gives you a foundation of knowledge that you've built on through experience that says, I don't like the looks of this thing. I'm out of there. I don't know how many times I've saved myself thousands of dollars by my intuitive view of price action at that time, where there's no rule that's triggered that says, hey, buddy, you better watch out for this. It becomes your experience, and you look at that and go, hey, I'm good for the day. I'm out of here. Boom, closed. Wouldn't that eliminate the uncertainty that you have? Well, you're not going to get rid of all that simply by taking my course in 6 weeks or whatever and completing that or doing whatever else it is that you might do. But you're building foundations. It's building a foundation. You don't put a roof on a house until you've got a strong enough foundation to support that roof. And so you need rules with conditions that match all the scenarios that you're going to meet from bid-ask to exit. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.